Chapter 6, Accounting Periods and Other Taxes. 6.6 discusses calculating and reporting self-employment tax. In previous chapters, we talked about a Schedule C, a self-employed taxpayer, and how they are subject to self-employment tax. In this objective, we'll discuss how to calculate the self-employment tax. The Federal Insurance Contributions Act, FICA, imposed Social Security and Medicare taxes. Employers, so if you work and you get a W-2, employers withhold a specific percentage of each employee's wages up to a maximum base amount, and then the employers have to match that amount with an equal amount and pay that total to the Social Security Administration. Self-employed individuals pay self-employment taxes instead of FICA taxes. Because they have no employers, the entire tax is paid by self-employed individuals. So for Social Security, the entire amount is 6.2%. There is a maximum base for OASDI, which is Old Age Survivors and Disability Insurance, the Social Security portion. In 2018, that is $128,400. What that means is, that 6.2% is just half of it. What that means is that all of your earnings up to $128,400 are subject to Social Security. Once you make over $128,400 in 2018, you do not have to pay any additional Social Security tax. Medicare, on the other hand, is 1.45%, and it has an unlimited base. If you make $5 million a year, you have to pay 1.45% Medicare on the entire $5 million. There is also an additional 0.9% Medicare tax that came about for income over $200,000 for single and head of household, and $250,000 for married, filing, and joint. And we'll discuss that at the end of the chapter. But if you are self-employed, you have to pay double these rates because you're paying your portion and what we consider the employer's portion. So for Social Security or OASDI, you would pay 12.4%, and Medicare is 2.9% plus the additional 0.9% if applicable. It is paid on a distributive share of partnership income and net income as an independent contractor. If you have a 1099 from somebody and you have to end up filing a Schedule C, you're subject to self-employment tax. It's important to note that self-employment tax is imposed on net earnings of $400 or more from self-employment. Net earnings include gross income from a trade or business, less deductions. So that amount on your Schedule C, your income minus your deductions, is the amount that would be subject to self-employment. You report this on the Schedule SE, and the fast method of looking at this is that you calculate it by multiplying self-employment income by 92.35%. Also, in arriving at net earnings for purposes of computing self-employment tax, self-employed taxpayers are allowed a deduction for AGI equal to 1/2 of the self-employment tax. So when you're calculating this, they get an above-the-line deduction for half of the taxes, and then they still end up having to pay the full amount, but they're allowed an above-the-line deduction for half of it. So take a look at page 620 for the example for a self-employed accountant on how to calculate the self-employment tax for him.